Good morning or good afternoon, sorry, for everyone, and welcome to this session of the DFI Exchange Group. We're very pleased to have you with us today for what promises to be a rich and insightful discussion on the use of alternative forms of collateral by DFIs. It's a topic that is both timely and critical for improving access to finance, particularly for women-owned SMEs. So this session is part of ongoing work of the ICR Facility, which supports public and private sector institutions across African, Caribbean, and Pacific countries. And today's session will build on the findings of our latest upcoming study, which is called How DFIs in ACP countries use alternative collateral, trends and impact on access to finance for women-owned SMEs. So we'll be hearing insights from La Banque Agricole in Senegal and the Tanzania Agricultural Development Bank. And we'll explore real-world examples, best practices, and practical guidance to help DFIs design and implement more flexible financing instruments. So the goal of this session is to learn from one another and to reflect on the work and build stronger, more responsive approaches. And to help us on this topic, we have here Juliette and Bertil, who work for Horus agency, and they have worked with us on drafting the study, and so they will be facilitating the discussions today. So we look forward to this session, and I'll hand the microphone to Juliette Auberti.
Thank you, Emily, and hello, everyone. So welcome to this fifth session of the DFI Exchange Group. We are very happy to have you with us today. So this session will be co-hosted by Juliette David and myself, Bertil Doucet, from Horus Development Finance. And as Emily said, we are the consultants who conducted the studies that will be presented today. So some of you may already know us from previous exchanges. And in the panel, we are very glad to have also Chizker Mazaki from TIDB and Omar Touri and Arunaba from LBN. So we will be together for 1 hour and a half. And we will first start with a round of introductions. And then we will walk you through the key findings of the study. Following that, we are very pleased to have LBA and TADB who will share their experience with us in live. And finally, we'll wrap up with a Q&A session to address the questions that haven't been covered. So as Emily mentioned, the purpose is really to have to foster dialogue. So feel free to ask any questions at any time in the chat, either in English or French, and we will take short breaks to answer the questions along the way. So first, let's start with an introduction, a round of introduction. So for that, please can you update your name in your Zoom profile with and put your name and the name of your organization in your Zoom profile. And then we will do a quick poll with Mentimeter. I don't know if some of you know it, but to participate, you have to scan the QR code that you can see on the slide. So please, when you have updated your profile, scan the QR code. So here I hope you can see my screen where we see in live your answers. So the biggest the word, the more the people have answered it. So it seems that there are more than 1 people in Nigeria. Whoa, a lot of people in Mozambique. Yeah, it's great to see that we have people both from Africa and the Caribbean, and maybe also from the Pacific.
So maybe I see a question in the chat regarding how to change the profile, the name and the organization name in the profile. So for that, on the top of your screen, you should find yourself in the list of participants, and then if you click right, you can then change name or update name. I don't know how the wording is, but it should work like this.
All right, thanks also much for your answers to the Mentimeter, and I also see some answers in the chat, which is great. Thank you all so much for your participation. And it's very good for all of us to see who's in the room today. Bertil, should we move on?
Yes. So now you can put, if you have any questions on alternative collateral, that you can just enter your questions. But you will also be able to do it later on in the chat if you have new questions.
And for those who didn't manage to join the Mentimeter website, then you can also put your question in the chat. So the idea is really to know what are the key questions you wanted us to address today.
Yeah, to make sure we address them, and then we will start. So it's great to see some questions coming in. So we can see that you want to know more about the types of alternative collateral. What could be the best alternative collateral for rural small-scale farmers? The types of collateral provided to women in SMEs, the findings from the study. It's good to know that you are excited about it. What is the process for introducing alternative collateral into your DFI, the risks and the challenges? Hopefully we will be able to answer all of it today. Okay, perfect. So thank you very much for participating in this Mentimeter. Let's start. So first, I will do a quick reminder about the context and the objective and the approach that we had. So as all of you know, access to finance is a major challenge for women-owned SMEs, including in ACP countries. And many SMEs, especially the ones that are led by women, struggle to secure loans because they don't have the assets that are traditionally accepted as collateral. And as you know, to access credit typically requires collateral, and financial institutions prefer immovable collateral, such as loan titles, for instance. And also there is a need to have a credit history most of the time. But in most developing countries, women have a limited or an unequal access to immovable assets. It can be due to legal barriers or to cultural barriers, including discriminatory inheritance laws or restrictions on women owning property. So for instance, customary law often restricts women from holding land titles or for controlling land. Or you know that land titles is usually the primary assets in farming communities to secure a loan. Also, in many countries, women have to require the consent of their husband to be able to pledge their assets as collateral. And regarding the credit history, it can be very challenging for women in the informal sector to build one. But we think that DFIs are very well positioned to tackle this issue. And this is why the objective of this study is to see what has been done by DFIs on other financial institutions, and to see what has worked so far, what hasn't worked, and to identify the best practices and provide practical guidance so that more and more DFIs can adopt alternative mechanisms, and the ones that have already adopted some can improve their use and can maximize their impact for women-owned SMEs. So regarding the approach, we conducted the study in 3 phases. First, we conducted a literature review where we reviewed over 30 reports. Then we interviewed industry stakeholders, such as Women Wealth Banking or other institutions in order to identify good examples. And then we interviewed around 10 financial institutions, mostly DFIs, but also microfinance institutions and commercial banks, and also one development project. So for the ones who are here, thank you again for accepting to participate in our study. So then we were able to do a mapping of all the options that exist and that can be used as alternative to collateral and alternative collateral. So here, when we say alternative collateral in green, it means accepting other types of collateral other than the traditional ones. And when we say alternatives to collateral, it means applying other mechanisms that will help reduce the risks, but that are not requiring collateral. So first, if we focus on alternative collateral, the most common one is movable collateral. So it means accepting movable assets as collateral. So there is a wide range of assets that we can accept. It can be intellectual property rights, or it can be cars, it can be equipment, inventory, accounts receivables. It can be livestock, furniture, or even agricultural products. Among these, there is two more advanced types of movable collateral lending, which is accounts receivable lending and also warehouse receipts financing. This is more advanced because for those mechanisms, the value of the loan that is given will be linked to the value of the collateral of the assets. For instance, for accounts receivable, the bank will do a loan that is closely linked to the value of the receivables that the SME has. Regarding other alternative collateral, there is also savings or cash collateral. So here it means that the bank will use the borrower's savings as collateral. Usually it is mainly used for low-income women, and it is used as a financial education measure to help them save money. But it's usually very small amounts, and it only represents around 10% or 30% of the amount of the loan, so it's more symbolic. And also, we can use alternative land titles, so it means documents that prove land ownership, that prove that the farmer is using the land, but that is not an official paper. Now, regarding alternatives to collateral, there is either using other types of guarantees, meaning, for instance, having other sources of money that could help if the SME defaults. Or there is also lending mechanisms that we can use and that help reduce the risks. Regarding the other guarantee, there is social collateral, which can be both group lending or individual guarantor. Regarding group lending, it can be formal, like with cooperatives, for instance, farmer cooperatives, or it can be informal with women groups, for instance. And in this mechanism, so a loan is taken jointly by a group, and then they all have to repay it jointly. And if one of the members is not able to repay, then it means that the other members will have to cover for him. Regarding the individual guarantor, here, it means that someone commits to repay if the borrower is not able to repay. But here, it's only an option for small amounts, usually. And it's very hard for women SMEs to find someone who is willing to do it for them. And as other guarantees, there will also partial credit guarantee schemes. So those are schemes where there is a third party, that is the partial guarantee fund, where the lender pays a premium or a fee to this fund, and this fund pledges to absorb part of the loss if the MSME is not able to repay. So these were the alternative guarantees, and now we will focus on the other lending mechanisms that can help reduce the risk for the bank. So it can be leasing or value chain financing, cash flow-based lending, alternative credit scoring, or even technical support. If we start with leasing up there, it's a mechanism where the bank will purchase a vehicle or equipment, and then it will lease it to an SME, and the SME will be able to use it, but they will make payments regularly, like every month. And then in the end, they may be able to buy the equipment on it. Regarding the second one, value chain financing, So this is mostly for rural lending, for agricultural value chains. Here, it's mostly so for farmer groups who will be able to rely on their relationships on the value chain. So with, for instance, with companies in transformation or with big buyers to bring those future cash flows as collateral. Then when we look at alternative credit scoring, it can be digital credit scoring based on alternative data sources. It means using transaction data such as phone data or utility payment to build kind of a credit history, or to build some data on people who don't have a credit history. Or it can be psychometric credit scoring, which is a method where people do a quick test, and we ask questions to understand their ability to repay. So to understand a bit we test their honesty, and we test their ability to do business. So we test how well they know their markets. And then there is technical support, of course, which can be capacity building or networking or mentoring. And here, as we help the SME strengthen its capacities, we can say that it reduces the risks, but it's not really usually technical support alone is not enough as a collateral, but it's a very good addition to the mechanism. I'm sorry, I skipped cash flow based lending, which is very well known by microfinance institutions who often use this methodology, because it is very good to serve small SMEs who don't have any certified financial records. And this is often the case for women SMEs. And in this methodology, so the bank will assess the previous, the historical cash flows and also the projected cash flows. And they will also analyze all the assets of the SME to be able to build a capacity, a repayment capacity, and to be able to assess if the SME will be able to repay and how much he will be able to repay. And in this methodology, as you learn to know the SME very well, there is less asymmetry in the information, and it's a way also to reduce risks. So here is a very big mapping of all the options we saw, but now we will dig into some of them. So I let the floor to Juliette.
Yes, thank you, Bertie. So actually, before digging into a specific mechanism, we wanted to share some general findings about DFI's practices regarding alternative collateral to lend to women-led SMEs. First of all, it was good to see that most DFIs interviewed had recognized that women were facing more challenges to access credit, and that collateral was one of the biggest barrier to access credit. So, and most DFIs had defined gender strategies to promote women's access to finance. But what was striking is that even though many of them had identified the lack of collateral as a big constraint, in their gender strategy, there were only a very few that really addressed this topic with the dedicated methods to promote women's access to finance. In general, what DFIs do is that they're recognizing this lack of collateral. They are just more flexible, proposing collateral-free loans, for example, or reducing the percentage of the loan that should be covered by collateral. So in a nutshell, they are just accepting to take more risk without mitigating this by alternative methods. So, and it's good because actually it's in line with their mandate to fill gaps and to accept to take more risk to fill these gaps in the market. But on the other hand, it has limitations in the long term. It results in a higher risks, obviously, for DFIs. And in case of so it doesn't address this issue on a sustainable manner. And yeah, in case of the crisis, the lending institution may face some challenges that may affect its financial structure. On the other hand, most DFIs that we interviewed had developed alternative collateral mechanism, like, for example, using movable asset collaterals, using collateral registries, for example, or warehouse receipt finance or things like that. But when doing so when developing new products or new mechanism based on alternative collaterals, they did it more generally to address MSMEs' lack of collateral, not with a specific gender approach and gender strategy, so that they didn't design a dedicated strategy to make these products and mechanisms very well suited to the women MSMEs. So, and even in terms of communication, in terms of product design, etc., they didn't take into account the constraints and the characteristics of women-led SMEs, which actually in many cases results in having a limited share of the people using this alternative collateral that were women-led actually. So we can now move to next slide. So just to give you a broad overview of the main mechanisms that we looked at, we have classified this mechanism according to 4 key dimensions. The first of them being the ease of implementation. The second one, the scalability or the potential outreach in terms of broad segments, target clientele, etc. Then we also looked, and if you look at the color, you can also see the classification regarding the relevance for DFIs to use this mechanism as market enabler. And then finally, we also looked at legal and regulatory requirements that may be more complex in certain cases. So very quickly, the easiest mechanism is requiring an individual guarantor, but obviously this doesn't really allow us to reach scale because it's limited in terms of finding. It has limitations in terms of women finding people who accept to be the guarantor, and then the amounts are also capped, etc. Then we have group lending that is also quite easy to implement, but has also some limitations in terms of potential outreach. And value chain financing, which is more complicated to implement. It requires to set up partnerships and to design a dedicated mechanism, and that also is more limited in terms of outreach because with each mechanism you target only the SMEs that are part of a structured value chain. So it also has limitation in terms of segments that you can reach with that. Then in the middle, we have leasing, cash flow-based lending, and psychometric credit scoring that are also more or less easy to implement and can maybe help to reach a better scale. It's however costly. Yeah, and not that easy to implement. Looking at movable collateral lending, it is, let's say, not so difficult to implement, provided that there is a relevant regulatory and legal environment and market infrastructure with a national registry that allows to register all collaterals that are also accessible, and the register being also accessible for all FIs in the market, allowing to ensure that there won't be another lender who will then take the same asset as collateral. So it's more it's the difficulty here is more related to the environment. And lastly, the partial credit guarantee scheme is also, from the point of view of the institution who sets up the guarantee scheme, more complicated to set up. But it is really the most promising mechanism to reach scale, because then you can target a large number of SMEs in all sectors, also adapting the conditions to the priority sectors or segments of the bank. And that's also why we've also highlighted that it is also a very promising mechanism for DFIs as market enabler to promote women's access to finance. Can now move to the next slide. So now if we move to a few recommendations for DFIs. First of all, DFIs acting as market enabler can have three different roles. First of all, they can set up partial credit guarantee schemes, as I just mentioned, which is really which has a high potential to reach scale. And this is also something that we have seen in many cases. Less usual, less common. We also think that DFIs can play a role in leading by example, proposing such mechanisms, communicating with the PFIs if they are working with partner financial institutions. So in their contracts, they can integrate incentives. They can also sensitize and provide technical assistance services for their partner financial institutions to raise awareness and build their capacities to use alternatives form of collaterals. And then lastly, we can also suggest to enter in a policy dialogue to create the enabling environment for some mechanism that require to have an adapted regulatory and legal framework. We can maybe move to the next slide. So now for DFIs who want to use alternative forms of collateral to expand women's access to finance, first of all, we highly recommend to look at already existing schemes within the institutions that are not specifically targeted at women, but to just see how they can be improved to better reach out to women. So first of all, the first step is to identify the different mechanism among the list, for example, that Bertie just presented. Just list the ones that are already available, and then look at the proportion of women among the users of this mechanism. And it was striking that in many cases, DFIs were not able to or not monitoring the percentage of women using this mechanism. So this is really a key recommendation to start by monitoring the proportion of women using the mechanism, and then conduct some surveys, some very quick surveys to identify what are the constraints for women to access and to use these schemes. So with staff, but also you could also do a short client survey to understand why women SMEs do not use the mechanisms that are available at the institutions level. And then you can then adjust the approach. For example, if you're using movable asset collateral, look at the different equipments that women are typically using and that they are able to provide as collateral, and then try to adjust for example, the valuation methodology, the identification methodology, etc., to better be able to integrate these types of equipment into your movable asset collateral lending mechanism. And then also in your communication campaigns, you could also showcase cases of women using such type of collateral to really target better the communication campaigns around the alternative collateral mechanism to better reach out to the women clients. Now, when this is done, you could also look at other new schemes. And for that, the steps that we recommend is to conduct, of course, a survey about, among your women SME clients to identify the different types of assets that are commonly held by them. You could also assess their social but also business relationships within the value chains to determine what could be relevant in terms of, for example, value chain finance or group lending mechanisms. And then, of course, review their financing needs to make a link between the collateral that they or the alternative mechanism that they could mobilize and their needs. In some cases, as already said, there might be some regulatory constraints or legal constraints. So we also highly encourage DFIs to initiate policy dialogues with the relevant authorities to improve the overall ecosystem. And even sandbox approaches could be promoted by DFIs. We also wanted to underline that it's in general better to combine different mechanisms. For example, provide technical assistance services for clients, for women, in addition to the alternative collateral mechanisms, for example. So now I think I will give the floor to Bertie.
Thank you, Juliette. So regarding the material and support that will be at your disposal. So of course there will be the study, but also you will be able to access 10 case studies that will be annexes to the study. There are 3 pages case studies, each of them. And they are based on the interviews that we have led. So you will be able to find 2 case studies on cash flow-based lending and also 2 on movable collateral lending and on credit guarantee scheme. And then of the ones below, and the ones in blue are the ones we are going to focus on today. You will also be able to find fact sheets, which are 1 or 2 pages, very practical, with very practical details. We have done 4 of them on the most promising mechanisms according to us, on movable collateral lending with use of a registry, on cash flow-based lending, psychometric credit scoring, and PCG. Regarding those fact sheets, you will be able to find a presentation of the mechanism and also a process. How does it work? Why is it relevant for MSMEs and DFIs? What are the prerequisites for implementing them, both at DFI level, for instance, staff training or stuff like that, and at country level, more like regulation that is needed. We explain the advantages and challenges and how to implement it step by step, and some of the success factors. And finally, we will also offer our support in clinics. So clinics will be coaching sessions for DFIs on the topic of alternative collateral. It will be calls with the Horace team. So DFIs can have up to 2 one-hour calls. And during these calls, of course, it will depend of DFI specific needs, but we will be able to provide more technical details on topics of interest for you, and we will be able to discuss practical steps and action plan for your DFI. But there is only 10 slots available, and it will be on the first come, first served basis. So if you are interested to have a session with us in July, you should contact us to book a slot. And the sooner the better. So if you can contact us before the 8th of July, then we can decide on a slot and have a call together. Now, quickly, we have already discussed it a bit, but we wanted to do a focus on one of the key mechanisms, which is movable assets with the use of collateral registry. So we have already seen that the range of movable assets you can use is very wide. A collateral registry, it is a record of legal claims to personal property used as collateral for a loan. And we have seen that most ACP countries have one, and now they are mostly digital. So how does it work to use this mechanism? So first, you have to identify the asset, and you have to really, the first step is to be able to give it a value. So you should be able to evaluate its value. You should provide a description, give photos. The asset should be very well documented. Then, of course, you sign an agreement or loan agreement where you include this documentation. Then the lender has to register it in the national registry. And which is very interesting with this mechanism is that during the whole loan duration, the borrower maintains possession of the asset. So if it's a vehicle, of course, he can still use his vehicle. Same for production equipment. So this is very interesting for the borrower. And then regarding the loan resolution, if it is well repaid, then the security is concerned. But if there is default, then the lender is able to repossess the asset that was pledged. As I see that we are late, I will not detail this because Juliette already a bit talked about this, and I think we can still we can move on to the interviews.
Sorry, Bertie, 1 second. Before we move on to the interviews, we have a couple of questions in the chat. There are quite a lot, so I thought maybe we'll tackle like 1 or 2 now before we move on to the interviews, and then we do the rest at the end. Is that okay?
Okay, yes.
Yes, there are a couple of questions. So I'll give you 2. The first one being, what is the level of recognition of the types of guarantees by the regulator? And then another question is, I'd like to understand how do agricultural products can be considered as alternative collateral, since most of them are perishable products. Those are the first 2 questions in the chat. Yeah, I'll give the floor to you to see if you can answer those. Thank you very much.
Thank you. Maybe I will take the first one. Actually, it really depends on the regulator and on the mechanism. And typically, this is something where we do think that DFIs could try to play a role initiating a dialogue with the central bank to also see how to recognize the mechanism. And specifically, if you are launching schemes like partial credit guarantee scheme, have discussion with the regulator so that the guarantee can be recognized in the regulation in terms of provisioning rules and regular prudential ratios. For the second one, a typical example of having agricultural products as collateral is the case of warehouse receipt finance, where actually the agricultural products, the crops is actually secured in a warehouse, which and then on this base and put as a collateral, and when the loan has been repaid, or when the loan is repaid, it can be really simultaneous. Then the produces can be given back to the borrower. But we will have maybe a discussion on that with during the interviews.
Thank you very much, Juliette. Bertil, back over to you.
Thank you. So I would like to welcome Tjiske to the floor for TADB. Tjiske, can you hear me? Are you here?
Yes, please. Good evening, everyone. Hello?
Yes, we can hear you.
Yes,
Yes,
we can hear you very well. Thank you. So I will first, at TADB, do you have a specific strategy for serving women SMEs?
you are muted.
Yes, please. At TADB, we have a specific strategy, as you mentioned. Mind you, we are providing finance through two approaches. We have what we call direct lending and indirect lending. And in both approach, we have a strategy to finance individual women and women-led SMEs. If I'm to expand further under direct lending, at least the interest rate which is provided for women is lower as compared to individual men and men SMEs. But when it comes to debt equity ratio, based on nature of application, the contribution of women is 20% by 80%, means that women or women-led SME will contribute 20% and the bank will provide 80%, while for men, it is 25% versus 75%. That is as far as direct lending is concerned. But when it comes to indirect lending, we are providing guarantee cover up to 70% for women led SME projects, while for other projects, the guarantee cover is only 50%. Thank you.
Yeah, thank you very much. We will come to this exactly. So first, I would like to focus on your partial guarantee scheme, which is called Smallholder Farmers Credit Guarantee Scheme, and which is the mechanism that we have focused on the study, because we think that it is very inspiring, especially what you do for women. So first, can you please tell us a bit more about how this Smallholder Farmers Credit Guarantee Scheme came to life?
Thank you. The Smallholder Credit Guarantee Scheme has got its history. The United Republic of Tanzania was implementing a project known as MIVAF through Prime Minister's Office. MIVAF is a short form of Market, Infrastructure, Value Addition, and the Rural Finance Program. So this program was under the Prime Minister's Office. Now, one of the components under MIVAF project was rural finance. And this rural finance component aimed to establish a guarantee fund in Tanzania. Now, during the midterm review, back in 2015, and this midterm review was conducted by IFAD, it was found that the guarantee scheme was not established. Why? Because of inability of partners to fulfill their obligations. Now, and at that time, the project, the MIVAF, was about to end. So instead of waiting for long for guarantee fund to be established, the midterm review came up with a recommendation of establishing what we call cover guarantee facility, where cash cover will be placed up front.
Mécanisme de garantie avec les banques commerciales. Et en 2015, et donc ces structures étaient déjà établies en tant qu'établissement de financement public et il fut avisé que cette...
So in 2018, yeah, 3 years after the midterm review, the smallholder credit guarantee scheme was established, and the tripartite agreement was signed between the Prime Minister's office, which was coordinating the MIVAF project, but again with the Ministry of Finance, which was the main borrower, and TADB as the fund administrator. So that's how the guarantee scheme came on. So thereafter, I think the regulation, the procedures was drafted for TADB to proceed with issuing guarantee scheme to eligible partner financial institution, and this were the registered and licensed partner financial institution. So in a nutshell, that's how the guarantee scheme came on.
Thank you very much. Very clear. I saw in the chat that someone was curious about how does this work? How does a partial guarantee, credit guarantee scheme work? Can you please explain very quickly how it works?
So the guarantee scheme, as I said, the TADB was chosen as a fund administrator. So through the procedure which was set, TADB would enroll licensed DFI. But before that, at least the kind of awareness was conducted to PFI, how the guarantee scheme is working, and so that they can enroll and apply for guarantee scheme. So the guarantee was provided to only agricultural value chain. This was specifically for agriculture sector, and almost everything, every crops, livestock, anything which is under agriculture was provided guarantee, except few value chain like tobacco and marijuana. And this individual, the guarantee was, through PFI, individual farmers, SMEs, farmers organization, cooperative organization was eligible to apply for guarantee up to 50%. But again, there was a clear monitoring procedures that those eligible partner financial institutions, as they are onboarding clients or applicants, they have to do all required due diligence and the procedures as set by the regulator, which is central bank. So once everything is clear, they submit the document to TADB, and then they issue the guarantee.
Thank you very much. So, as you said, you have done something specific for women SMEs, and you have made adjustments on the coverage by increasing the guarantee coverage to 70%.
Okay, It is true. Initially, the guarantee was 50% to both, whether it's a men-led SME or women-led SME. But over time, this is not a gospel truth. The review was conducted, and recently there was a special consideration for women projects and youth and this is based on the findings which you have already mentioned on the limitation of having collateral and access to finances. So it was advised that for women-led SME or women-led projects, the guarantee should be up to 70%, while for men, the guarantee still remain at 50%. So those are the kind of advice, review which was done for SGS.
Thank you, very inspiring.
Yeah.
As we are running late, I will only ask you one question on movable assets, because I know that you also accept movable assets as collateral. But if we zoom on women, have you observed any movable assets that are more commonly used as collateral by women SMEs?
Now, as I said before, we have two arms, the direct lending and indirect. Let me concentrate on the direct lending, because on the indirect lending, which is the collateral part is managed by the applicant or by eligible partner financial institution. But for the direct lending, yes, we do accept movable assets as collateral. And mind you, our mandate is only on the agriculture sector. So one of the movable assets is like tractors, combined harvesters, trucks, called the trucks, etc. So they are accepted as part of collateral. Remember, the primary collateral, which is maybe fixed asset, like titled land, it's difficult for women to have. So those kind of assets are acceptable. But when a woman or women-led SME have applied for that tractor or that combined harvester will not be registered with their name. It will be registered with the name of the bank until when they will clear their loan is when the same will be changed name into their own. So it is part of the collateral.
Okay, thank you very much. So as we are running late, I think I will stop here for the questions.
Sorry, Bertie, one question in the chat specifically for TADB, if that's fine for you. Sorry, Kirsten. So the question is, does TADB consider insurance of agricultural inputs or products before committing to guaranteeing an agricultural project?
Come again?
Does TADB consider insurance of agricultural inputs or products before committing to guaranteeing an agricultural project?
Not really. We don't consider that.
Okay, thank you.
Yeah.
Bertie, back over to you. Sorry.
Thank you very much. So, conscious of time, I think we will now give the floor to LBA, to Aruna and Omar.
And
so,
sorry, for this interview will be in French. So for anyone who's listening in English, please make sure to turn on your translation to English on the bottom right of your screen so that you can follow along. Thank you very much.
Aruna, est-ce que vous pouvez m'entendre?
Can you hear me, sir?
Est-ce que quelqu'un
Yeah,
LBA peut m'entendre?
Can somebody from LBA hear me? Yes, loud and clear. Yes, Mr. Umar. Thank you very much.
Sur LBA, nous allons d'abord poser des questions sur le leasing, ce qui rejoint un peu du coup ce que Shirsker vient d'expliquer.
First of all, we are going to ask questions about leasing, and then after we'll talk about something else. I have not introduced LBA, but you can do that.
Tout d'abord, concernant le leasing.
And first of all, regarding leasing, can you let us know when did you start embracing leasing and what was the ulterior motive behind this?
Voilà, merci. Donc, moi,
Thank you. Thanks. My name is Mr. Omar Touré, I am together with other co-workers, Aronamba, who is the focal point for this product, this leasing product. And also Lindsay working on, let's say, green funds. So in order to answer your question, the Agricultural Bank is the leading bank when it comes to funding, let's say, agricultural value chain in Senegal. It was set up in 1984, and since then, our core business is to fund, to bankroll agriculture. We used to be involved in mainstream banking, but in 2020, we indeed embrace leasing because we had a feeling that our customer had badly needed that, especially when it comes to upgrading agriculture and modernizing agriculture in Senegal. So this is the reason why we, let's say, got involved in that. Thank you. Now, regarding leasing, do you have some specific or categories of equipment which is popular with women? Yes. Yes, you have a number of type of equipment. For instance, sorry, I lost him. And
OK. Merci.
Merci. Est-ce que vous voulez compléter la réponse ou c'est bon pour vous? Donc surtout du matériel.
Voilà. Donc nous avons le type de transport.
Oui. Comme
le
des
matériel agricole
véhicules,
est composé
des tricycles ou des choses
tracteurs,
comme ça. Ouais.
des tracteurs
Ouais.
et tous les accessoires, les moissonneuses batteuses, les groupes électrogènes, ou groupes de, comment dirais-je, et les groupes motopompes.
Merci beaucoup. Et en effet, j'avais retenu de nos échanges que dans ce qui était populaire pour les femmes, il y avait aussi tout ce qui était les décortiqueuses et aussi les petites unités de transformation, que ça soit pour l'arachide ou la cajou.
Whether when it comes to, let's say, groundnuts, cashew nuts, and juice, and also trucks for transporting finished products, finished commodities.
Le crédit bail est une solution pertinente pour répondre au manque de garantie traditionnelle chez les femmes.
So this is a leasing. Leasing is a, let's say, a relevant solution to, let's say, meet the needs of ladies. Yes.
Oui, le crédit bail, effectivement.
Yes, indeed, leasing is a flagship product because it helped women
de financer du matériel
and to finance, let's say, the purchase of equipment, namely, let's say various equipment, but especially the solar pumping system,
qui a permis
which enable us to, let's say, make life easier for women.
Mais également des unités de transformation.
And also processing units for groundnuts and peanuts.
Et de noix de cajou.
Où il y a beaucoup de femmes qui sont actives.
Yes, we know many women, we are very active in that.
Est-ce que vous avez rencontré des limites ou vous rencontrez des
Are you being faced with limitations?
Justement, quand vous essayez de servir les femmes,
whenever you try to serve women, are you being faced with some specific issues or challenges?
Oui,
yes, indeed, of course. So you have a number of barriers with regard to leasing. But for the time being, we can say that
cette difficulté est
such problems can be, let's say, overcome because it has to do with a network of vendors and suppliers. So who are able to generate tailored equipment for women.
Mais trouver aussi des partenaires qui peuvent les
The
accompagner
issue also is to identify partners that can prove
dans
supportive to them
l'acquisition d'équipements
when
neufs.
it comes to purchasing brand new
Merci
equipment.
Mais que parfois, du coup, le
Which
crédit
is
bail est
less demanding
difficile à
that
mettre en
man.
place pour des plus
So
montants pour
such
financer ce matériel-là.
credits were quite
Pour des hommes
difficult
qui ont
to
besoin
be,
parfois du matériel
let's say, put in
gros.
place compared to men who need
Merci beaucoup. Si on
larger
passe maintenant au
amounts
crédit
of
à des
loans.
groupes de femmes,
Now, let's move
chez
on to the
LBA,
issue, the
vous
question of
faites
credit
beaucoup de crédits de
to
groupe, et
women.
notamment des crédits de
So
groupe à des groupes de femmes.
you are quite
Avec ce mécanisme,
conversant
enfin,
with group
quel
loans,
mécanisme
group
permet
credit.
de
What
sécuriser du coup les
type
crédits
of
accordés à des groupes de femmes?
mechanism or what type of scheme enable you to promote lending to women?
Donc, pour sécuriser effectivement les crédits accordés
When it
des
comes to
groupements de femmes,
loans and credits given to, let's say, women groups,
nous avons expérimenté ce qu'on appelle le financement à coût partagé.
and we, let's say, experience what we call, let's say, cost-sharing system,
qui se justifie pour les femmes pour
which can be justified
faciliter
for women to facilitate
l'investissement agricole,
and agricultural investment,
pour autant créer une dépendance de à la subvention.
and in order for us, not for them not to be, let's say, subservient to grants or subsidies.
Ce mécanisme crée les conditions d'une mise en relation durable
And
entre
this
les institutions de
mechanism
financement
creates a possibility to maintain a long-standing relationship with financial institutions
et des acteurs de capacité entrepreneuriale.
and then with stakeholders with entrepreneurial and skills.
Le financement à coût partagé, qui est un outil particulièrement intéressant
This is quite
pour
interesting,
procurer
this
aux
system,
femmes,
and to provide women with
une chance pour changer
an
leur
opportunity
structure de production
and to change their production
et
structure or
ainsi
facility, and
améliorer
thereby
la rentabilité des activités
improve
économiques financées.
the profitability of the business activities so funded.
Le mécanisme repose sur le principe de
This
faciliter
scheme is based on
de
facilities,
l'accès au financement par le crédit
access to
en
funding
accordant,
via credits,
en accordant une subvention sous la forme d'une contribution au renforcement de l'apport personnel des acteurs ciblés.
in order to buttress and let's say the funds provided.
D'expérience dans le cadre du projet d'appui régional à l'initiative
We have an
pour
experience
l'irrigation
with
au
a
Sahel
regional support program towards irrigation in the Sahel region.
et l'USAID à travers le projet Nafore Warsadi,
and also together with USAID through this local projects.
qui justifie que ce mécanisme qui vise à s'appuyer sur le secteur financier
This substantiates the fact that this mechanism, which is based on the financial sector,
pour soutenir le développement de l'accès au crédit des
and
femmes.
to support the development.
Et à travers cette expérience, le Paris
And through
avait accordé
this experience, we granted
une subvention de 50%
a subsidy of 50%
aux femmes et
to women,
l'USAID une subvention de 30%.
and from USAID a subsidy to the tune of 30%.
Et ça portait sur le financement de l'irrigation privée.
And this has to do with funding private irrigation systems.
En finançant et diffuser l'utilisation de pompes solaires.
And also we funded and disseminated the use of solar pumps.
Pour améliorer la productivité des petites exploitations agricoles féminines.
Improve the productivity of low output female farms.
la banque avait mis en place un produit qu'on appelle Wamambay.
And the bank set up a local product called Wamambay, which is a local terminology,
avec
in
un partenaire
partnership
technique qu'on appelle
with
Nightbee Sénégal.
a technical partner called Nightbee Sénégal,
qui assurait l'encadrement technique,
so they were responsible for technical oversight, provision, and also maintenance, servicing, and repair.
Qui a permis de vraiment donner de
This
très bons
move
résultats à ce
help
projet.
yield dividends. This move yielded dividends.
Voilà, merci beaucoup.
I submit. Thank you.
Merci beaucoup. Oui, en effet, c'est un bon exemple.
This is a pretty good example where women did not have to provide individual collateral, and thanks to this subsidy, but they also receive, let's say, grants to purchase this equipment.
Merci beaucoup.
Thank you very much,
LBA, du coup, pour,
dear the LBA team, for these insightful answers. Since we are lagging behind time, we are going to stop. Yeah, we would like to appreciate you for your insightful, let's say, instances.
So, I think we can switch back to English.
Maintenant, je pense que nous pourrons repasser à...
We can open the floor to questions.
Have we addressed all the questions in the chat? Maybe we can start with those that haven't been.
There's one remaining on the partial credit guarantee scheme. It says the partial credit guarantee scheme has a cost. Who covers the price?
So maybe I can answer, and then I will let TADB maybe share its experience on that. But in general, the fee is covered by, is paid by the beneficiary institution, financial institutions, which in turn translates it or in an increased or in other fees applied, or in an increase or fees of the fees applied to the final borrower. So in the end, this is the final borrower in general who pays for the guarantee cost, considering that the fees are generally higher, even if it's sometimes silent, so that the final borrower doesn't know. I mean, it's a good practice not to communicate too much with the final borrowers on the fact that the loan is covered by a guarantee. So that's why it is in general embedded in the fees generally applied by the bank. I don't know if TADB wants to complement.
I think I missed a question. I was typing something. Can you repeat it again?
Yes, the question was that the partial credit guarantee scheme has a cost, and who covers the price?
Okay, for the case of TADB, actually the applicant covers, he pay all the costs. TADB will come in just in case the applicant default, fail to pay whatever they agreed with the partner financial institution. And mind you, this is coming up to fulfill the mandate of the bank of catalyzing other financial institutions. That's why we are working with the other partner or commercial bank to increase access to finance. So everything they are charging, even the interest rate which they are charging is their own. Thank you.
Thank you.
Okay.
Yeah, thank you very much, Chair Sker. I think that is clear, and if not, please ask more questions in the chat. And Juliette, I saw that you already tackled the question on communal land, but I think not everyone has seen the chat. So would you also like to tackle the communal land question now verbally as well?
Yes, and I saw that Cioska also responded on that, so I will also let him complement. So using communal land as collateral requires actually to use a kind of alternative land title that are land use rights that should be actually, I mean, if the borrower has the right to use the land, the communal land, then this land can be, or this use rights can be used as a collateral, provided that these use rights are formalized. So meaning that some formalization has to take the form of an alternative title formalizing this land use rights. It's usually called, or it can be called a customary title. And this is common in rural areas, for example. And then maybe TADB can share his experience with that, because they are also doing that.
Okay, the practice is that if that particular land is owned by the applicant. That's the common practice. But again, it has its limitation that with the communal land, you have a small ticket of loan. You cannot, because even if its value is lower as compared to the titled land. But all these are being implemented at least to accommodate majority of farmers or population in the agri space. And I think, much as I don't have clear statistics at my fingertips, most of the commercial banks are not accepting that communal land as collateral. Most of commercial, they are not accepting, except for us, since we are public institution, and as a public institution, we are also fulfilling obligation of the government. So that's why we have included it in our as part of collateral. If you can allow me to share one more, is also we are using animals. We have a special project of dairy projects where farmers are supported to acquire heifer for dairy production. So that heifer, that animal itself, is used as a collateral. And this has supported a lot of women, because most of the women are also involved in dairy farming. So animal themselves, they are used as collateral, much as they are associated with high risk, but that's the best way we can use it to support more women. I submit.
Thank you. And if I may add, I think from what I know, under this hyper financing project, you also bundle the credit with an insurance, a livestock insurance on the heifer that is financed, which is also an interesting way to secure the loan and to also mitigate the risk for the farmer. Do you confirm?
Sure.
Thank you.
Thank you very much. I think last question for today, and if there's any other questions, please email them to us after the webinar ends. Juliette, do you also want to say a couple of words on the psychometric scoring as an alternative to collateral?
Thank you. Bertie, you want to take this question?
Yes. So regarding psychometric credit scoring, so In the study, we have interviewed Wazaza in Ethiopia. And as you said, it's not always used as the only collateral. For Wazaza, it was used more to build a credit history, not really a credit history, but to make to build a history with the clients and to make sure that the client will be able to repay and to build relationship with the clients. And then sometimes they still required some collateral in addition to psychometric, but it was seen as the first step to extend loans to people who didn't have any credit history and who didn't have any transaction data. And for those who didn't have anything to prove their business, it was a first step to approach them.
And very concretely, the loan officer went to visit the client with a tablet, and then they were filling in a psychometric test questionnaire. And then on this basis, the borrower or potential borrower got a score that would, that was actually analyzed statistically to assess the probability of default or of good repayment, so as to then be able to use it as a scoring to assess the repayment ability.
Yes, exactly. It was like a 45-minute test, and they were helped by the loan officer to do it. And they put as much images and pictures as possible, because usually it's for women who were not literate. So it was adapted to this to their abilities and profiles.
Okay, thank you very much. I think we're running a little bit out of time now, and I wish we could answer all the questions. We can't, but yeah, kindly send them over, and I'm sure we'll be able to answer those. Well, then thank you, Juliette and Bertu, for your presentation. And also thank you very much to the TADB team and LBA team for coming in today to present. Emily, I'll give you the floor to close this session of the exchange group. Kindly go ahead.
Yes, thank you, Maya, and thank you, Juliette and Betty, Tjirsker and Omar and team for all this presentation. Thank you for all the participation today. There were a lot of pertinent and interesting questions. So I hope these presentations gave you good insights and inspiration for your own work. So before we close, just quick reminders. The study presented today will be published soon, both in English and French. We'll make sure to communicate about it once it's published. About the tailored support, so the clinics. If you're interested, you can write to Bertie and Juliette. The emails have been shared in the chat with me in copy. Just note that you need to be working for a DFI to qualify for this support. And there will be a short survey that will pop up automatically when you leave the call. So we'd be grateful if